Like I've always been saying, trading is an important skill that every trader should focus on building and bettering his skills all the time. The foundation of your trading journey is your setup, your risk management. These are the things that qualifies your trading. These are the things that changes the narrative of your trading. And these setups and risk management aversion or tools can only be possible when you understand what you are doing. So before we start this morning session, just be informed. You can only grow better when you keep learning all the time. You get it? There are most of the time I don't know, but I'll ask you this question before we depart or before we leave here. I'll ask you this important question before we leave here, and I'll see your answer to that question. It's just a very simple question. But guys, we should be very careful out there. Personally, I don't know. Aside trading, I don't have anything that I will say. If it's not a fiscal business, I will tell you the real truth. Hmm? There are some of you that you want to make it in this trading industry, but you are not willing to sacrifice anything. Okay? You are not willing to sacrifice anything to be here. So how do you expect to grow when you yourself you are not sacrificing anything to be here, to be there for yourself? So there is this gentleman of mine that I do assist in trading, and he one day told me, he said, Brother Ima, if trading can give us this such results, then why don't you think we should give some time to learn all the skills that involves in this trading thing and build some experience over time so that we can earn more? I said, you are correct. Today, some of you will work here, another day you work there, chasing the money that is in the wind that you can never get. So, if you are here this morning, you are fortunate to be here, right? If you are here this morning, you are fortunate to be here. And I'm very excited to have you here this morning. And I'll use the opportunity to encourage you that stay firm in your decision. If only if you know you want to trade, stay firm. We are here together. We are in this together. We are growing together and we are going together as well. Look, there may be a lot of things that will come your way, frustrating you just to make you think you are not enough and what you are doing is not enough and you need more other things to do. I've come across a lot of people who added so many things because they motivated themselves enough with fake motivation that they are multitasking. And today they are nowhere to be found. Today they are nowhere to be found. Just don't deceive yourself. Do you get it? You need to remain focused in your journey and your decision. Let me say this. The last time there was a leader who wanted to quit, and his intestine and his souls were deceiving him. So he came to lie to leaders that, oh, my brothers, and and RoyalQ is working perfectly. But then I also got another opportunity, which I think I can add it up. I will still work on my RoyalQ business. In no long time, just like 2 or 3 weeks, I realized that all his status has been lots of RoyalQ, no RoyalQ to be found everywhere. So I asked him. Then I realized that the next day he used to be posting the new project all the time. I asked him, but I learned he said, you are just going to multitask this business. So what happened? He began giving different colors of excuses. Look, a great man once said something. He said, all excuses are genuine. Listen, all excuses are genuine, but they are the fertilizer to your failure. I repeat, all excuses are genuine, but they are the fertilizer to your failure. And of course, you may give a very reasonable excuse to why you are not learning. You might give a reasonable excuse to why you are not making money. You might give a reasonable excuse to a lot of things. But I want I want you to know emphatically that whatever excuse that you give, it's an excuse. It's a genuine excuse, but it's like a fertilizer, helping your failure journey to be so successful. Do you get it? So all excuses are genuine, but they are fertilizer to your failure. So today you start with this. Today you start with this, another time you do this, another time you do that. Then you continue giving excuses upon excuses upon excuses upon excuses. Look, let me tell you, I never wake up one day to give excuse to why I shouldn't do something that I have to do. If I have to, because it is my life. Oh man, trading is your life and you need to take it serious. So when will you continue to give excuses to why you are not doing certain things that you have to do? Hmm? So when? The question is till when? Will you continue to be giving excuses to why you are not doing some of the right thing that you need to be it needs to be done? But we are still going. So all excuses are genuine, but they are the fertilizer to your failure. Hmm? If you don't take care, you may feel very badly because you like giving excuses too much. Let's see. We can still learn something good this morning. We are here to grow together and we are in this industry together as well. If you give up, you give up for your own good. If you stay in for your own good. So if I were to be you, I'd rather use that opportunity of giving up to rather give in and build up myself to meet the future demand. If you give up, you don't lose anything. Listen, if you give up, you don't lose anything but losing all at once. So you better keep up with your journey and keep focusing on yourself and bettering your skills all the time. That is going to be the right thing that is going to help you. Are we together? Are we together? I just feel like being tired to share few things with you before we proceed with this morning session. Are we together? Is the message home? 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 The message home? Good, 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 good. Very good, very good, very good, very good. All right. Now let's talk about risk management. Let's talk about risk management before we come to talk about trade settings. Let's talk about risk management. Now, one beautiful aspect of trading is a trader who understand the fact that one, trading is a risk. When you talk of trading, someone who uses his money to take risk, okay, who takes risk with his money, with his money, that person is called a trader. So in trading, your ability to understand and manage risk is important. And over here, both on the spot market, sports and futures, it's all about risk taking. And even in all the financial market, we need forex. about what risk taking, right? So as a trader, you need to understand how to take risk, how to manage risk. So I'll take some few time for us to look at some few angles of risk management and how to handle them. Then we'll move on to trade settings. Right. So basically, the idea of trading is to risk some amount of money, to risk some amount of money to make more profit. So for let me say a month now, for a month now, I have a banker that mostly we used to do this. We just traded $50 for his account. Okay, we traded $50. Now with this $50, we just make sure that by the end of the week we've doubled this $50 and we've made like $100. Now listen, anytime we make $100 profit, we take $50 out of it, then it remain with this $50, which is the trading capital. We've repeated this cycle for 4 times, which simply means out of this $50, no liquidation, we've been able to hit, that is, okay. So out of this $50, 4 times profit on it, that is giving us 50/50, that is $200 has been earned on it already. Now, how can this be possible? It's about understanding what you mean by risk. Hmm? Risk is important, and you need to learn how to manage your risk. And the first principle of risk management is understanding the amount of money to risk. Okay? Understanding the amount of money to do what? To risk. That is the first principle of risk management. Do you get it? That is the first principle of what? Of risk management. So when somebody says, right. So the first principle that you always need to understand. Now, some of you just go in a market, you don't even know the amount of money to use. That is the first thing, right? You don't even know the amount of money to use to trade. It simply means you've not come to a realization of risk management. So when you wake up, before you decide to have your setup, everything, the first question that you need to ask yourself is, how much am I going to risk today? Listen, how much am I willing to risk today? So if I'm willing to risk $50, I set aside $50. It doesn't matter the amount of money that you have in your account. Don't just begin to trade because you have money. Listen, don't just begin to trade because you do have money in your account. That is one of the sorry to use I don't want to use, okay, don't worry. That is one of the very bad way to trade. To wake up, you see a signal, then you go, you enter. Okay, let me use $100 to trade. Okay, let me use, I have some money in the account, so let me use $200. No, we don't do that in trading. In trading, before you trade, you should be so firm and well understood of your decision about the amount of money that you would already risk. So today, if I know today is Monday, my risking capital in this market is $50. It's $100. It's $200. Now, before you risk this amount of money, you should be aware that, are you okay with the outcome of this money? We're talking about risk management. Do you get it? We're talking about what? Risk management. So before you decide in risking that money or going into the market, not just because you have money and you are just entering into the market to just start trading without checking I have money. Let's use this amount of money. No, that's not how we trade. First, your risk management responsibility is to decide on the amount of money to risk. The reason why most people get hurt in trading is because they go in without a plan. So your risk management also form part of your plan. They go in without what? Without a plan. So if you go in the market without a plan, and then the market gives you a plan, now you begin to feel hurt because the market has given you a plan. But you came in without a plan. So you know that, okay, I'm well prepared. It is $100 that I can afford in this market. If you come into the market with $100, you are well prepared to meet the demand of $100. So your psychology is telling you that whenever I join this market, the money is $100. This is the money that I'm using to trade, and whatever be the outcome, I'm well versed to handle it. Are we together? Please, do you get it? We're talking about risk management here. Do you get it? So we can't just talk about risk management by giving you strategies to go about it. Do this, do that, do that, do that. And then all of a sudden you don't care about money. First, respect money. If you don't respect money, it simply means you don't respect risk management. Are we together? Are we together? Are we together? Are we together? Let me know if we are making sense in this session. Hmm? Let me know if you are making sense in this session. Yeah, good. Very good. Yes. So that is the first principle, right? Risk management. When it comes to risk management, the first thing is your capital. The second principle of risk management, after deciding on your capital, is the assets. I'm talking to you as someone who is learning, who is growing, and who wants to know his left from his right. The asset is important as part of your risk management. You see, when it comes to trading, okay, the asset you trade plays an important role in your profit and loss aversion. The asset you trade, look, you just decide to trade with $50, no problem. Now, you madly went for an asset which can easily swallow this $50 and still call for $1,000 again to swallow. You didn't help yourself. So, always, my rule is that before you trade, get to know an asset and vibe with the assets. You get it? It's also form part of your risk management. Hmm? Now you decide to jump to on BTC, and sometimes you can't even trade not all capital. Like maybe I don't know. Sometimes you can't trade particular amount of money with a particular asset. Hope you know that. So all these things are some of the things you need to take them into consideration before you venture or you enter a trade, and they form part of your risk management. Right. The next thing about risk management, it's about, let's get back to the capital. If it is $50, your open position trade. Some of you prefer to go on stop loss. Some of you prefer to go on margin calls. And I've always been saying this. If you use stop loss, there is no need for you to use margin calls. But if you use margin calls, you can also opt for stop loss. But in actual sense, it doesn't make any right better sense. Do you get it? So it's either you go for margin calls, you go for stop loss. It's up to you. Now, on my side, listen. First, my decision is that I'm going to use $50 to trade. Automatically, I'm ready to risk $50. So my responsibility is to either look at these two wages, either using stop loss or using margin calls. Which one is going to be the best? That is the first thing for you. So let's talk about stop loss as part of risk aversion too. So stop loss, why do people use stop loss? And I keep explaining this over to you all the time. People people use stop loss to reduce or to cut down losses. Hmm? People use stop loss to cut down their losses. Do you get it? People use stop loss to just cut down their losses. So if let's say this person is having $50 exposed trade, the person assumes that he cannot afford to lose all this money. Therefore, he can afford to lose maybe $20 out of the $50. Now, if I am trading, if I don't want to use stop loss, then I assume that this $20 is my entire risking capital, no longer $50. If I am using $50 to trade, listen, if I am using $50 to trade and I still believe that this $50 is what I can afford to risk in the market, then on a side of margin calls, I would rather opt for opening $20 trade than using $30 to as my risk aversion to binding the trade to do to on go. That is the difference between the stop loss and the margin calls. So the person using stop loss is saying that I can only open a trade of $20 to the market or lose a trade of $20 to the market. Then the person using margin calls is saying that I have $20, I can only lose $20 to the market, but with a trying moment. So when it comes to risk management, I always differ, and I always want you to understand that there are different forms of risk management that you can go for, but before you go for them, you need to do it. You need to learn and understand them. So there is nothing wrong with going for stop loss. Listen, there is nothing wrong for going. There is nothing wrong in going for a stop loss, and there is nothing wrong in going for a margin calls. If only you understand the nature of your trade. If only if you understand what you are doing, you don't need yourself going telling yourself I want, if you want the best, then just understand what you are doing. So you ask which one is the best. They are all okay depending on the trader's preference and then understanding. Now the next other side of it is open position. Now, why do someone open trade with margin calls? The purpose of the margin calls is to buy and also earn from the sub cells. Do you get it? Two, the purpose of the margin calls is to help the trade yes, is to help the trade to do what? To be able to mingle in the market for some time. The purpose of the stop loss is to help the trade to mingle in the market for some time to cut down his losses. The purpose of when you talk of opening position, the same capital, which is the $50 that all of us are using, this person intends to use part of the money and then also to use part of the money to hold the position in the market, especially on cross mode, to which we will talk about that. So on both sides, stop loss, opening margin calls, and then open position, they all works as a form of risk aversion or risk management tool for traders. Do you get it? Let me know if you get the point of discussion this morning. First, we are talking about risk management, then we proceed to trade settings. We're talking about risk management, then we proceed to trade settings. We're talking about risk management, then we proceed to trade settings. Do you get it? Let me know if you get it. 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 Do you get it? Let me know if you get it. Do you get it? Do you get it? Mm-hmm. Let me know if you get it. Very good. Very good. Very good. That is awesome. Good. Very good. All right. Okay, let's proceed. Let's proceed. Let's proceed. So, in the case of margin calls, listen, as risk aversion tool, now when we open margin calls, the idea is to first earn from the market as the market keeps going against you. So in this case, you earn from what you call the sub cells. That is the first thing. Second, mind you, you have a capital of $50 and you've used $20 as your FBA, which simply means you still have about $30 to control things in the market so far as the market still works in your direction or against you. Sorry. While the market works against you, you still have $30 to buy up more. So you may earn from the sub cells, and at the same time, it guides your trade to on go. What happens to trading is that on the futures market is this. It is the more money that you have, that your trade can be sustained for some time in the market. Do you get it? So in this case, if you have more money to open margin calls, at least that will serve as a guide to protect your trade. Now, there is one unique thing about some of the trade that I set, mostly on open position. I set a trade. Listen, I set a trade. Let's assume it's $100 capital. What I do next is just go in the market with $30 or $40. Now, if it is cross mode, so you go back to trade settings and you get it right. If it is cross, I just reserve if I know $100 is what I am using to trade, I wouldn't use $40 to or the $100 to trade, or even higher than that. I will use less of that money and then use the huge amount of money to control things in the market. Now, which simply means if your $100 is swallowed up if your $40 is swallowed up in the market, this $60 is higher than $140. It may give you more energy in the market as compared to using $60 and then also using $40 to trade. I don't know if you get my point. So what the mistake most traders has been doing is that they prefer to go in the market with huge sums of money, then rather get back to use small parts of their capital to be hedging or protecting the trade. No, we don't do that. We don't do that. So aside the use of stop loss, if you want to, personally, I'm not a guy of stop loss though. I mostly don't use stop loss in my trade. Yeah, I mostly don't use stop loss in my trade. Right. So what I'm saying is that now in this case, always be conscious of the amount of money you are using to trade. It's $100 that you are using. Don't rush in using $70 to as your FBA. Then you rush in using what do we call $30 to protect $100. No. How do you think as soldier police will protect soldier? Hmm? Let the soldiers protect the police. Hmm? It is the big man. It is not a strong man that protects the weak. Do you get it? Isn't a strong man that protect the weak? And ever since I started doing this, personally, liquidation, I don't think it's been a while. Hmm? It's been a while. What prevents most traders from understanding risk management is greed. So it's greed. Your trade you can make more profit on this $40 capital. It's because you want to make more profit on this $40 and $70 capital using your $40 or $30 to protect the $70. What? It doesn't work like that, man. You get it? It doesn't work like that. You can trade consistently and you always feel comfortable. You make some profits and you enjoy the market. Right. So basically, when we talk of risk management, it's not anything too big deal. Listen, risk management is not anything too big deal. So let me first let me see drop in the chat box. Um okay, drop in the chat. Let me see. Have you been liquidated this year? If sorry, I said okay, let me see. The past 2 months, have you been liquidated? If yes, drop yes or drop liquidation in the chat box. Have you been liquidated? Have you been liquidated for the past 2 months? Have you been liquidated? Have you been liquidated? Have you been liquidated? Yes. Have you been liquidated? Yes. Have you been liquidated? So have you been liquidated? So let's analyze what mostly causes your liquidation. Let's analyze. Have you been liquidated? I'm talking to those that have been liquidated. So if you have not been liquidated, no problem. So let's analyze what has been causing this most often. Okay. Now, let me see. Okay. Now, let's look at something. You see, okay. So, but you keep getting SL. You see, so let me talk about this first. I still keep hitting my SL keep hitting. Interesting. You see one thing. One of the reasons why personally I don't like using stop loss. I believe in I believe in one thing that I have more opportunities in the market than to limit myself. So I don't put limitations on my trade. Do you get it? I don't put limitations on my trade. That is one thing about me. I don't put limitations on my trade. One, I have the ability to wait for long. I have the ability to wait for long. Like I said earlier, I always understand risk management. So before I trade, I know the amount of money that I can afford to risk in the market. If it is $100, I know I've set up $100 trade already. Do you get it? So in as much as you keep doing all this while, first understand this. The problem is most people can't wait. Most people can't wait. That is a problem. Now let's move on. Let's move back to what we are talking about. So liquidation. Now, mostly liquidation happens not because maybe your trade settings are not too good or you are too bad. First, whenever I'm teaching things about liquidation and risk management, I always want you to understand that, of course, it is normal to be liquidated. Of course, it is normal to be liquidated. Do you get it? It is normal to be liquidated. But then, liquidation becomes too frequent, which is not normal. When liquidation becomes too frequent, which is not normal. Now, for throughout this year, 2026, the asset that I've been trading is this asset. Okay, that's the asset that I've been trading on Binance. This is the asset. This is the only asset I've been trading on Binance. Now, I see people talk about broccoli. It gets liquidated. It get this, and I'll be like, I'll just be folding my arms, be watching some comments, and be laughing. Now, listen. Trading is not something too difficult. But if you want to complicate things, you complicate. First, you may be liquidated if you are the type you keep trading all kinds of assets. That is the first thing. If you are the type you keep trading every asset in the market, of course, liquidation can be something normal to you because that is the point. But if you master the act of focusing on few assets, maybe two, three assets consistently, that is an honest truth that I'm telling you today. It will be very difficult for you to be liquidated. Then liquidation may be something once a while to you. Like I said, so this is the only asset that I focus on trading on Binance, right? On the futures markets, on the futures markets, I only trade on broccoli. Now, sometimes when I give signals, I realize that some people will just jump into my DM. They'll be like, "The asset that you give hasn't delivered. I've closed it in losses because I'm afraid." I'll be like, "No problem. I would wait for this same asset to close in loss for me. To close in profit for me. I'll earn the profits. Whilst I get back to the people, I ask them how far. They said, "Oh, I couldn't wait. I closed it in loss." Which simply means most traders can't wait. Do you get it? Most traders can't wait for their trade to hit their take profits. Immediately they see trade going against them, they begin to panic. And this is one of the main reasons why you get liquidated because you panic all the time. Sometimes I don't know how to explain these things to you because trading is more of like intuition. You feel so very bad about your trade, it happens. You feel so confident about your trade, you wait to see the action, and that is trading. Do you get it? That is trading. So in the case of liquidation, the first thing that you need to do is to first consider the assets that you do trade all the time. Consider the asset again. Reconsider your asset that you've been trading. It will help you a lot. And the next thing is always understand that liquidation is normal until you consistently get liquidated. If you are the type liquidation becomes your friend, you keep on getting liquidated all the time, then it is not normal. You get it? If you keep getting liquidated all the time, then it is not what? It is not normal. Then what do you do? If you are the type you get liquidated all the time, first, if possible, apply stop loss in your trade to reduce that rate of getting liquidated all the time. Now, mind you, The next thing is, if your trade keep getting hits of your stop loss all the time, that one too is another problem. Then you need to check up with your entries as well. That's the next thing. So always you need to make sure that even if you are not winning, listen, even if you are not winning, you wouldn't lose like that consistently, always getting hit of your stop loss, always getting hit of your stop loss. It is not good. Mm. Then the best thing that you could go for, if you think you have been hit of stop loss all the time, or your stop loss keep getting hit all the time, then always go for either open position or margin calls. It will help you, right? To do what? It will help you a lot. It will help you a lot. So go for that. Now, let's go back to trade settings. How do you set up your trade? How do you set up your trade? Let's go on that. Then maybe I give you the opportunity to ask your questions. Your questions will help us to learn more than I teach. Okay? Your questions will do to help you to learn more than I teach. So let's go on to trade settings itself. How do you set up a trade? Very simple. On the futures markets. Now, mind you, before I proceed to talk about the futures markets and not the spot market for now, you see, this time round, if you want to trade on the spot market, it is good. But then it isn't the best time unless you have particular asset that you want to hold for some time. Don't be trading on every asset on the spot market. Listen, don't be trading on every asset on the spot market. It is likely, listen, it is likely that the way market is going, if the market cycle is truly true, listen, if the market cycle is truly true, listen to me. If the market cycle is truly true, then probably we may be heading towards bear season for some time before the bulls will still enter into the market. If the market, listen, if the cycle is still working as it used to be, 2026 actually is not meant to be a bull season. Listen, 2026 is not meant to be a bull season. If the cycle is still working as it's supposed to be, 2026 is not meant to be a bull season. 2026 is a bear season. So do not be so excited about anything. Listen before you tell me that we didn't tell you this. Well, if the market pump, we don't have problem. But I just want you to be aware of this. That under normal circumstance, in a normal market, where cycles works as it's supposed to be, like the cycle that we know from 2017, 2018, 2019, thereabouts or now, even though we know a lot of things has changed in the market. But then the truth is that 2026 and normal circumstances is supposed to be a bear market. So don't be surprised if you see markets keep dumping all the time. Right. So what am I trying to mean? What I'm trying to mean is that, of course, if you are trading on the spot market, be careful of the assets you do or you trade. But then try to learn to afford risk and handle the futures market with care. You may be able to make some money to invest in the spot market. Hmm? You may be able to make some money to invest in the spot market on a longer run. It will help you a lot. Right. So let's go back. Let's go. Let me see. If you say about markets, I understand. Go up, yeah, yes. Am I right? Or I actually don't get either you are right or wrong. Um mm, all right, so let's proceed. Let's proceed. So let's go to let's check out how to set up a trade. Sorry, how to set up a trade. How to set up a trade. So let's go to RoyalQ. Let's go to RoyalQ. All right. So over here on the futures market, basically for those picking signals on the signal platform, let's go on the signal platform to see some of these things that we've talked about here. So let's check out on the signal platform. Um, okay, so let's see this. Okay, so let's look at this. Let's look at this. So now let's have this signal set. Let's have this signal set. Okay. So first, what I've been saying in most trade when it comes to signal settings is this. You need to understand one rule. That's one, you don't own this signal. You don't own this signal. Right. You don't own the signal. So you are to follow instructions. As simple as ABC. You are to follow instruction. When it comes to signals, especially when you pick signals on a signal platform, your responsibility is to follow the instructions. Like I've always been saying, signal is something given based on an expert or a trader's knowledge, belief, and confidence in the market. That is all. The trader's knowledge, belief, and confidence in the market. That is what forms a signal. So why is the trader saying short this trade? It's knowledge, his understanding about the market. Why does he want to short the trade? Because he believes in his knowledge. And he's making this decision because he is so sure, confident about his belief that it will work. That is the reason why he is saying so. Maybe the market may be saying so, the market may not be saying so. Yeah, that is the truth. Do you get it? So always understand that. And there is nothing you can do because he or she doesn't also controls the what? The market. He or she doesn't control the market as well. So even though he may be right, but when the market turns his decisions to be wrong, things may also go upset. Do you get it? So whenever you are trading a signal, please learn the principles in going for signal or using signals before you begin to complain. Right. So now let's go. We have this particular asset. What's the name of the asset? What's the name of the asset? Okay. So let's look at it. This is the name of the asset. NJUSDT. Right. So let's go. NJUSDT. Is it NJ? GNJ, right? Okay, here is it. All right. Now, mind you, your responsibility is to set up the trade. Fine, if you can analyze, you proceed to analyze. It's your own advantage. If you can analyze, you proceed to do it, you proceed to analyze. If you can't, ignore, proceed to do as the owner is what is saying you should do. Do you get it? So you proceed, we click on create. I understand. Now, the next thing is they said short the trade. They didn't ask you to long it. Short the hot the trade. So you tap on short. Then you click on trade settings. You come to manually create. Now, there have been several discussions on either you should place your trade on what do we call whole warehouse mode, or sub-in mode, or sub-in real-time settlement. All these ones will depend on one, your setup. If you are opening margin calls, then that is fine. But if you are not opening margin calls, just put it on whole warehouse mode. If you are not opening margin calls, you are using stop loss open position, then just place it on whole warehouse mode and go your way. Do you get it? If you are opening margin calls, then you want to earn from the sub sales. Place your trade on sub-in mode real time settlement, earn from the sub sales and go your way. If not, if you are using open position and then also stop loss, then the best thing you could go for is whole warehouse mode. It's simple as ABC. All right. Now you get back here. Over the time, we've discussed about this several times. This is the only big deal in trading, in using RoyalQ. And then I'll talk about another thing, the preset. Okay. So now they said you are to trade. This is what you're going to trade, and you want to use an FBA of your capital that you want to use is maybe $20. So very simple. Like we've been doing the calculation, 132 divided by 5.026 times your leverage, right? So let's assume you are using 20x times 20x times your capital, which is $20. So let me go and check out. 135 divided by 5.0226 times 20 times 20, which is 10,751. 10,751. Okay, so that is giving you 409. Where from the 409? That is your calculation. Well, is it 135? Was it 135 in the first place? Okay, 132 rather. 132. 132. Oh, 132.0226. 10,512. Is it 10,000 what? 512. Okay. Okay. Good. So now we have this here. We have the value here. The question is, how did we enter this? It's very simple. Always check the first buying amount you want to place. In the trading, we've consistently said this. If you are in $20 capital, multiply it by your leverage, which is 10x or 20x or 5x. That is what is going to get you the first buying amount you want. So 20 times 20 will give you 40, which simply means in natural sense you are going to use 400. Please, do you get it? Do you get it? Where is the Zoom itself? Do you get it? Do you get it? Let me know if you get what we are talking about here. Let me know if you get what we are talking about here. So listen, at the end of the day, That calculation is what is going to help you to make things right. That calculation is what is going to make you make things right. If you do wrong calculations, it will affect your profit. If you do wrong calculations, it will affect your profit. All right. Now, listen, this is what we are saying. The asset you are trading is called where is it? ENJ, right? So what we are saying is that now they said 132 is equivalent to 5.0226. And we want to trade 400. Where from the 400, that is our capital is $20. So times our leverage, which is 20, making it 400, right? So we want to see 400 here. If that is the case, how many of these can give us 400? So in simple terms, we just get back here 132 divided by 5.0226 times our leverage, which is 20 times our capital, which is also $20. Now this is going to give us 400. Sorry, we just want the value here. So let's see. That is what is going to give us the 10,513, which is equivalent to 400. Simple as that. 10,513 ENJ is equivalent to 400 USDT. That is what we are saying. Please, do you get it? Do you get it? Now, there are some of you that will prefer to set up a trigger price, as in going for a preset value. If you want to go for a preset value, come here. You are going to see optional advanced settings. Come to the advanced settings. I'm not touching some of these points because I assume you already know some of them, right? So I'm touching the important part of it that you need to be well aware of so that you can ask your question. So now, advanced settings. When you come to advanced settings, look, we have this. Where is it? Trigger price. Do you get it? Trigger price. So they said optional. So when you come here, if you are the type you want to set a trigger price or a preset price, sorry, if you want to set up a preset price, the next thing that you have to do is to just come here, come to this place, optional, and then enter the preset value here. So those of you that want entry price for your trade, your entry price can be set here. So let's see if let's assume let's see if we get a trade like that from the Signal platform. Let me see. Okay. Um. Okay. So let's see. Very good. Now, when you look at this particular trade, when you look, they said entry. This is the entry price. Okay. This is the entry price. So what you have to do is that you come here. Let's ENJ, right? So let's look at the name of the asset ENJ. So is it the same ENJ that we are talking about here? Okay, ENJ, very good. So when you come here, they said optional. Where is it? Good. So when I come, what I'm going to do is it's 0. The entry price is within a range. Okay, they've given you the range from this to this. So maybe I'll go for the first one, 0.03305. Oh, 0.00335. If I'm right, let's check it out. Let's check it out. 0.03305. 0.0 0.3305. Is that correct? 0.03305. All right. So now this becomes your entry price. So until or your preset price. Now listen, preset, entry price, all those terms always mean the same and they work the same. Your preset price is the price at which you want to enter the trade. Your entry price is the price at which you want to enter the trade. Current price is the price at which you want to enter the trade at is the exact market price. That is the difference. So over here, I've entered my price. Do you get it? I've entered my entry price here. So there is no need again. All what I have to do is to come back again, set up my take profits, my leverage, maybe 10x or 20x. Use 10x or use below before you get liquidated. All right, this is just for lesson sake. So 20x, you proceed, you take profits. All right, you take profits, you proceed whatever you want to go. Now we talk about the take profits. So over here, you click on confirm, right? The take profits of okay, 0.1, then 0.1, okay, 0.1. Now you get back here, you change from cycle to, where is it? From cycle to one shot. On the futures trading, listen, on the futures market, it isn't too advisable to place your trade on cycle unless you've analyzed the trade yourself and you know its potential and what it can do. Do you get it? Unless you know the trade, you know its potential and what it can do, what it can do. If not, do not place your trade on cycle, get back to one shot and continue. Yes, cycle is very good. That is if you know what you are doing. If not, if you are like me going for someone's signal, please do not. Do not. All right, that is caution to you. So one shot. Then you proceed. You click on confirm. So you click on what? Activate. Then you click on I understand. Now, because this is a preset entry price, this signal can only be triggered when the market has trigger or when the entry price is triggered. Before that trade, that particular trade will be what? Will be bought in the market. Do you get it? So before you proceed to use a preset value or an entry price, know that once you enter the trade, it can only be triggered for buy or sell when the price has actually triggered for your entry price. Let me know if you get it. Do you get it? Do you get it? Do you get it? Which one? The repeat. Which part of it should I repeat? Hmm? All right. Now listen, listen. Abnavi, listen to me. This is what we are talking about. Now, all right. Now, let's get another asset. Let's do this together. So, let's see. This is an asset here. Let's see this. Okay, let's see this. Um, those assets with the entry price. I want those ones with the entry price to see. I want those with the entry price to see. Okay, so let's look at this. Now, this is algo. This is the entry price. Let's go again. So pay attention. Let's set up this trade. Okay. So algo. Let's search for algo. 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 Is algo not here? Maybe I've not added it. I guess I've added all assets. Yes. Algo is here, isn't it? I just saw algo. So where is it hiding? Okay. First, algo. Now you click on create. What is the instructor asking us to do? He said we should long algo. So long, right? He said we should do what? We should long algo. This is it. We should long algo. So long, right? Good. You click on trade settings. Then you click on manually create. Now, over here, those who were asking the 30 something, over here they said 49.7 algo is equal to 5.0097 USDT. 5 USDT. 49.7 algo is equivalent to this. And what we are saying is that we want to trade, use $20 with a leverage of 20. So it's going to be 49.7 divided by 5.00797 times 20, which is our leverage, times 20, which is our capital. Right. Good. So let's go there. Get a calculator. Okay. So 47. Is it 49 or 47? Help me out. 49. 49 point. Gosh. 49.7 divided by 5.0097 times 20 times 20, which is 3,968. So let's see. 3,000, 3,968. So let's approximate 69. Good. So basically, this is what we are getting. After doing that calculation, this is what we are getting. We are getting 400 USDT, which is $20. $20 is 400 USDT, right? It's 400 USDT. That is it. Okay. So what we are saying next is that now our leverage happens to be 20x. Fine. Now the next thing is we have advanced settings. Advanced settings. So you click on optional. You click on optional. After clicking on optional, over here we have trigger price. Trigger price. So if you want to enter your entry price, just come here, Nicodemously check the value. This is the trigger price. This is the what? This is the trigger price, right? So because you have the trigger price here, all what you have to do, because you have the trigger price here, all what you have to do is to do what? Is to check the value here. Do you get it? Check the value here, which is 0.0, which is 0.10700. It's within a range. Listen, what we are saying is that it's within a range. You're not going to go for all the range, but you are just opting for one. So maybe 0.10700. Right? Okay, so let's go. Let's enter it here. 0.1 is 0.0, 0. What? What is there? 0.10700. Okay. 10700. Or you can only enter what? 2. Uh what is that? Maybe you can take only 4 decimal place. Is that the case? The first one we entered more than that. Hmm. Okay. All right. So that is it. Now you've set up your preset what? Your preset entry value. Your preset entry value. So the next thing that you do is to click on what? Click on save. Now another time I'll take time to explain what do you mean by this. How to another time I'll take time to explain these two things to you. The range. So after switching on the margin calls, we have range price, the highest, then first drop optional, cooling period, off period. I'll take time to explain to you another time, right? So the most important thing now is your preset what? Your preset entry. Your preset entry is the most important thing now. So now you are done with that, right? What you have to do is to click on save. After clicking on save, you click on confirm, right? So what we are saying is that if you want to set up a preset entry value, this is it. You've done that. Hmm? You've set it up here. So that is the value. Initial buy-in price. Initial buy-in what? Buy-in price. So it's one part of your setup. You can do that before you proceed to do what? You proceed to trade. It's simple as ABC. That is what we are talking about here. All right, let me end here. If you have any question, ask. We cannot learn everything today. Learning is a process. So let's end here. If you have any question, ask your question. All right. So someone is asking if I have $100 my capital in Binance, but I want to use only $20 return X leverage. How should settings be using that example of algo? So in that case, where is it? Okay. So let's assume 49.7 times 5.0 something 0.079 or something. The decimal place times your 20, which is your capital, times your 10x, which is your leverage. So that is it, right? It's simple as ABC. Just multiply the leverage, your capital times your leverage, then the actual this thing equivalent amount, which is 49.7 divided by 5, which is the equivalent amount of 49.7. So after that, you just multiply, you get the value, you enter it there. It's simple as ABC, so which is going to give you around $30, right? Which is 20 times 10, which is 30. 20 times 10 is how much? Hey, my brain is gone. 20 times 10, hey. Okay, for you guys should come here. Mm, 200, right? So that simply means you're going to use $200 to do the trading. Yeah. So hope you get it. So how did you get 4.079? Hey, my God, oh my God. So, all right. Now, let me see. Kindly divide. Who is saying, I don't get your question. How did you get 4.079? I don't know which 4.079 you're talking about here now. Hmm? All right. So, guys, if you have any question, please ask. If you have any question, please ask. I believe and I hope this session has been helpful to you. And I hope this session has been helpful. So if you have any question, ask. If you have any question, feel free to ask before we bring the session to an end. Igwe Pami, this evening is business presentation. Okay, so you are asking where did we get the 49.7 divided by 5? Yeah, so now when you get back here, every single trade that you set up, listen, should it not be 49? Every single trade that you set up, let's use this trade as an example. Every single trade have a minimum threshold, okay? A minimum threshold. So understand trade settings. When you come here, listen, when you come here, this is what you are going to see. See this 2,947,000 cats is equivalent to 5 USDT. You can choose to add the decimals. So 5.00151059. If you fail to add the decimals, fine. That is it. So that is where we got so the other trade was 49.7 divided by 5, because mostly the minimum amount, the minimum entry you can enter here is 5 USDT. So this simply means with this particular trade, the minimum you can enter is this, which is 5 USDT. But you said no, you don't want to enter this minimum of 5 USDT. You want to enter with 200 USDT because which is based on the leverage, because you have 10x and your capital too is what is $20, which is going to give you 200. So in this case, if it is 200, all what you have to come here and do is 2947 divided by 5 times 200. Where from the 200? 10 times 20. So because I didn't want to simplify everything before I proceed following the mathematical principles, that is the reason why we said, okay, 10 times 20. So 10 times 20, then everything here. So that is what is going to give you the value, which is the 200 you have to enter here. Please, do you get it? Do you get it? Do you get it? Do you get it? So if I usually input my trigger price on the first stage, on the initial buying price, instead of going to the trade settings, is it the reason why my entry price doesn't trigger? Well, I cannot tell, but it's mostly what I know is if you want to handle it, most people have been complaining of it doesn't trigger. The last time, guess when the leaders asked, so it's better you go to the that what we just did now. Go there and set up your entry price. I think that will be more of a precise way to go by it than um the rest. All right. Now, how much capital percentage of the capital is advisable to use? Yeah, so in most trade, always analysts will tell you use at most 5 to 10% of your capital. Meanwhile, this case, 5 to 10% of your capital, some of you, your capital now it's just $10. Just imagine. So it's something that I would say is relative. Do you get it? It's relative depending on your capital, but at most, if you use 30% of 20 to 30% of your capital, that is fine. In our case, most people use small capital. So once you talk about 30% of the person's capital, 30% of that person's capital is just like $1. Hmm? How do you trade? 30% of that capital is just like $1. Shabu. All right. Please explain more on leverage. I don't think I'll be able to do that today. Right, I'm sorry. I don't think I'll be able to do that today. We will have the advanced class on Monday. So I'll take time to explain things regards to liquidation. When you talk of liquidation, what it is. When you talk of leverage, what is this? When you talk of longing a trade, shorting a trade, cross isolated, you discuss that on Thursday, which is part of the advanced class session. So please get prepared. Today's session is for trade settings. Okay. Today's session is for trade settings. So get prepared. I'll add up that lesson to Thursday's session. So get prepared. Let's meet again if we permit Thursday. All right. If there is any other question with regards to trade settings and what we've discussed this morning, you can bring it out. We spent an hour and 30 minutes, 33 minutes here. I think it's okay. It's good time. All right. So, can you cancel the trade from triggering after you have activated and you feel the trade is off? Yes, you see, one thing is when you enter a trade based on triggering price, interestingly, it doesn't buy in the market exactly. So you can cancel it anytime. You can cancel it anytime. So far as it has not triggered for buy, you can cancel it or sell, you can cancel it anytime. Yes. Then the signal you are using, for example, do you take profits gradually? All right. So now, when it comes to take profits, it's two things. Either you go for a take profits once, or you go for a gradual take profits. But I always advise if you make some profits in the market, it's okay. So you can go for it gradually or once. It all depends on you, your greedy appetite. It all depends on your appetite for profits. Okay. So you can either go for once, that is, you enter the take profits once, or after it's sold, you re-enter again. Do you get it? After it's sold, you re-enter that again. You re-enter the new take profits again. That is it. All right. So I believe that is all for today. We will end here. If God permits, we shall meet again this evening. Please inform your prospects. Let them get set. We shall have a business presentation this evening led by Coach Mo. So let's all get prepared. Don't know either Coach Mo, Leader Blanks, and Mr. Blankson. Any of them that will be available, we will see to it. So we'll end here. Mm, yes, the session is being recorded, so we don't need to have a lengthy discussion. Guys, someone said I have some inquiry here. All right, so ask your question. We are waiting for you. Ask. All right, you are listening to you.
Hello,
You've been
good
asked your
afternoon, everyone.
good afternoon.
Leadership, mine is just an inquiry. I think by the time you are trying to explain something related to the mode of the trade, my network was like breaking. So I didn't get you well. But I got that point whereby you are saying an army cannot, the police cannot protect the army. It's the army to protect the police. So what were you trying to point from that point of view? I just want some clarification from that point of view. And the other thing is, I've been using some like I've been using warehouse mode, and I usually use like let me say $120. But I find it with the leverage sometimes mostly I keep it 10x. I don't decrease, I don't increase. Sometimes the results used to be okay, but if there are some days of losing, of course you will have to lose a lot. So I wanted to advise, I wanted to you to advise me. Is it okay, like in case I saw you trying to use 20x, like let me say out of like 150, you risk like 30, and then you put 20x, and then you go in all in like without a stop loss because that is the amount maybe I'm willing to lose. Will that be fine? I think that's all. Thank you.
All right, you're welcome. Okay. So let me. Okay. So your first question now. When I said what I said about an army, police cannot protect army, but army protect police. Yes. What I was trying to mean is that you cannot use smaller funds to protect huge accounts. Do you get it? You can't use smaller funds to protect huge accounts. So instead, if you want a proper risk management, then strategize your capital such that your entry price, or sorry, your entry position amount, or your FBA wouldn't be higher as compared to the amount of money reserved to protect your trade. And that is what I've been doing. That is what I said. So in most cases, if you want, let's say I cite an example where someone is having $100. That person has used 70 or $80 in the trade, and he has reserved $20 to protect the trade. You will soon be liquidated. Instead, why not use maybe $40 or $30, or half of the money, or let's say $40, then you use the $60 instead. Do you get it? The goal is for you to hit your take profits. So however means that you use to ensure that you are going to hit your take profits, which will be a secured means. That is what you have to do. Right. Okay. Now the next thing about your capital. Personally, I don't use 20x in my trade. I use 10x. Whatever trade that I set up, the 10x leverage that I use, I have not exceeded 10x before. In my whenever I'm using, it's 10x that I use. And it's advisable use 10x or below if you want. Increasing your leverage is just a sign of increasing your risk instead. Do you get it? Increasing your leverage wouldn't favor you to be making the target that you have to be hitting, but rather you'll be increasing your risk. So lower your risk and apply different risk management. So for instance, you talk about stop loss. If you prefer, maybe out of the $120 that you've been using, if you prefer, maybe you go into the market with $50. Right? If you are using $50, now assuming $50 times your 10, which is going to give you 500, right? In every single trade, even if you are going for 1% take profits on 500, if a trade is being sold, that is around $7 to $8 per capital. Do you get it? Which simply means even if you are able to take 2 or 3 trades in a day, that is around $20 to $25. Do you get it? So if you prefer to go for a stop loss, that is fine. Notwithstanding, you can also go by opening position. You use part of your capital, which is less of your capital, then more of your capital to do to protect the funds as well. It's simple as that. All right. So um I believe we will end here for today. If God permits, we shall meet again this evening. Kindly get your guests, your prospects, your family members, and your loved ones prepared. Tell them that you have an interesting conversation with them this evening. Your company is having a business presentation, or your team is having a crypto education program that would really help him or her to be enlightened about crypto. Let the person know that we are just enlightening people about crypto, and it's a very nice educational program. Let them join, let them also learn, and very soon they will join you and your business to grow as well. All right, so we will end here for today. I thank you so much for your time. I appreciate your presence here, and Anna, okay, so Leader Chadwick is here. Thank you for being here with us and throughout the session. God bless you, Leader Chadwick. All right, so guys, okay, Mr. Blankson too is here. All right, so I honor all the leaders on board, and God bless you for being with us throughout the session. All right, so we will end here for today. If God permits, we shall meet again this evening. Get prepared and bring your prospects on board. So we shall meet again. If you have any question, always feel free to ask on the discussion platform or wherever. So Stay away from Ponzi scheme. Stay away from scammers. All right. Don't be greedy as well and trade with caution. Have a good day and love you all. It's still 10:13 a.m. in Ghana now, and I believe it's a very hot afternoon in most parts of East Africa and then also South Africa. I wish you all the best and I love you all. Bye.